what's up, boys and girls? Alright, welcome back to another edition of the weekly market analysis. So this week, alright, I have a question from one of my subscriber, right? Stanley dropped me an email. He said, Rainer, right, I have a question, right? I'm wondering, is it possible to have 25 winning trades in a row? Because I've seen traders, right, he made 25 winning trades in a row. Then he's asking me, right, Rainer, so do you think it is possible to achieve 25 winning trades in a row? And my answer to Stanley is this. It's very simple, right? Stanley, right? Winning percentage in trading is just one side of the equation, right? The other important side of the equation is your risk to reward ratio, right? Because with only winning percentage and not looking at the risk to reward ratio, it's not giving you a clear picture. And likewise, if you only have your risk to reward ratio, but you don't include your winning percentage, right, you will not have a clear picture either. So in order to have a clear picture, right, to know whether a trader has a positive expectancy in the market, you need to look at number one, your winning percentage, and number two, your average risk to reward ratio. These two numbers, right, combine it together, you will know whether you have a positive expectancy. So back to your question earlier, right? Earlier question you asked me, whether is it possible to win 25 trades in a row? Yes, it's very much possible. And in fact, it is very easy to accomplish it, right? One way I can think of is to have a really, really small take profit target and to have a really wide stop loss, right? Say for example, I have a 2 pips of take profit target and 100 pip as my stop loss. So I can tell you I will go winning, right, 30, 40 trades in a row, right, of 2 pips profit along the way. But what happened is when I hit my losses, right, my losses is going to be a negative 100 pip stop loss. And now the question is my winning percentage, are my wins, alright, consistent enough, right, to offset that one large loss? That is the question that, you have to find out. Because according to the probability, right, according to statistic, right, the moment you have a very small stop loss and a very large stop loss and a very small take profit target, what you're going to get is a lot of wins, many, many wins in a row. But when your losses come, that losses is going to be large, it's going to be huge. It's going to wipe out a lot of your gains, right? The question is it going to wipe out your gains and more? Or is it, your gains are actually, consistently enough to offset the large loss, right? This is a question that you have to find out. So thank you for your question, Stanley, alright? I hope I answered your question. And oh yeah, right? Another variation, right? Sometimes, it may not be a 2 pips take profit target. It could be, say, for example, 100 pips take profit target and a 5,000 pips as your stop loss. Again, the math will work out because your stop loss is relatively larger than your take profit target. So the math, right, you can manipulate it and, come up with a very high winning percentage trading system. So yep, thank you for your question, right? I hope I answered your question. So in this week's market analysis, we will be looking at a few things. We'll first look at the dollar Mexican, we'll look at the euro dollar, as well as the New Zealand yen. Then I'll share with you a little bit of insight between the swing trading approach as well as a trend following approach. So I think this week's video will be, I would say, extensive. I'll be covering quite a bit, right? So I hope you enjoyed it. So with that, right, I'll see you there. Okay, so this is the chart of the dollar Mexican. This is the monthly chart, and you can see the monthly chart is very bullish. Well, I mean, it is very bullish. At the same time, you notice that there's quite a few wicks spiking up and down. So those few wicks on the monthly chart would translate to retracement on the daily chart. But nonetheless, we both can agree, right? I'm sure you can agree with me that on the monthly chart, dollar Mexican, the bias is towards the upside. Also notice, how many straight months that, it has closed higher, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? Out of the last 11 months, right? 10 months, it closed higher. So this is telling you that, the path of least resistance on the dollar Mexican, right, it's towards the upside. So no doubt, right, as a trend follower, I would be looking to long this market. So looking at the daily chart, where the trading opportunity lies, if you ask me, would be, notice the 20 and 50 period moving average over here, right? It has been acting as dynamic support. The red line here is the 20 EMA. The blue line here is the 50 EMA. So when price, right, should price retraces back into this zone over here, right, this will be a long opportunity for me. So this is something that I'm watching, right, the dollar Mexican. Up next, let's look at gold. So if you recall, right, gold last week I mentioned on the 4-hour chart, this was an area, right, for shorting opportunity. So we haven't really come into the area that we are waiting for, but nonetheless, right, I want to highlight to you, right, on the daily chart that there is another trading opportunity. So looking at the daily chart, what happened is that we had a break below this support area, all right, by this strong impulse move lower. So what happened after the break is that we are starting to see price consolidate on the daily chart. And if you look at it, right, it's actually a very simple flag pattern, right? That looks like this, right? There is a flag pattern that's forming on the daily chart. And usually, right, I don't want to give it 100% because nothing is 100%. But usually what happens is if the flag breakout, right, it will usually follow along the trend, which is the path of least resistance towards the downside. So if you are trading off the daily chart, right, this is a flag pattern that you may want to pay attention to. So do bear this in mind, right? This is the chart of gold. And up next, all right, I want to share with you is the chart of the euro dollar. The euro dollar currently, from a trend follower perspective, right, from a trend trading perspective, I am not interested to trade it. But however, from a swing trading perspective, right, then this is something little different, because notice on the euro dollar, you can plot out your resistance over here, right? This resistance area. You have this support. So what happens is that we have a range, right? A range that we can potentially trade from. And my bias for the euro dollar is, after all, still towards the downside based on the longer term time frame, right? Because if you look at the weekly chart, euro dollar still clearly, right, I think the bears are still in control. So on the daily chart, what I would like to do instead is that I would want to short the resistance over here. So if price in the coming weeks or in the coming days, it retraces higher, and then it trades above the resistance and then does a false breakout and close down lower, right, close bearishly, I will be looking for a short trading setup for the euro dollar towards the downside. And for me, this would be a swing trade. So profit targets wise, right, I will look to take profits just ahead of this support area over here. So this is my take for the euro dollar from a swing trading perspective. And last but not least, right, share with you another example. I'm not sure if I talked about this last week, but it's a chart of New Zealand yen. Again, it's a similar setup. This is the resistance. Then we have a couple of support coming in, right, over here and over here, right? We have basically, right, two levels of support. The first one being the nearer one is the one over here, and the other one over here. But resistance wise, I'm sure you can agree that this will be the key one that we are paying attention to. So what happened is that my bias for this New Zealand yen is also towards the downside, right? You look at the daily chart, it is bearish. So on the 4-hour chart, I will be more inclined to short. So we got this signal last week. Not sure if I mentioned on the weekly analysis with you, right? But nonetheless, it is the same signal that I'm looking on the euro dollar, right? We have price coming into resistance, right? Then we had the false breakout as price formed this bearish engulfing pattern, after which price then trade lower, and this is the support area that I'll take profits. So again, right, this is the same setup that I'm anticipating and watching on the euro dollar. Let's watch if it happens. And yep, that's all I have for you, boys and girls, in this week's market analysis, right? Hope you all find it useful. If there's any comments, feel free to leave it below. With that, I wish you all good luck and good trading. I'll talk to you soon.